What if the biggest investment scams of 2025 weren't hidden in dark back rooms, but appeared openly on your phone, inside messaging apps, and across websites that look completely legitimate? This video exposes the most shocking real investment scams of 2024 and 2025. These weren't rumors. These were documented cases with real victims, real platforms, and losses reaching billions of dollars worldwide. Staying until the end matters because every major scam exposed this year followed the same dangerous pattern. Miss it, and the next one might look like security instead of risk. The story of 2025 starts somewhere familiar: private messaging apps. Across the US, India, and Southeast Asia, regulators uncovered large-scale crypto scams operating almost entirely through WhatsApp and Telegram. Victims were added via referrals, social media messages, or casual introductions. The groups appeared professional daily market updates, profit charts, screenshots of withdrawals. Everything seemed normal. US authorities charged 7 entities linked to a crypto scam that stole over $14 million. Victims were instructed to download trading apps with live dashboards showing steady profits. Small early withdrawals worked. That was the hook. Once trust was built, victims were encouraged to deposit more. When attempting to withdraw larger sums, they were told to pay taxes, verification fees, or account upgrade charges. Those fees were the last payments anyone ever made. Soon, apps stopped working, WhatsApp groups disappeared, and support vanished. Investigators later confirmed there was no trading-only simulated profits. What made these scams terrifyingly effective was patience and psychological manipulation. Small withdrawals destroyed suspicion. Some reinvested their profits, others borrowed money, and some convinced family to join. In early 2025, a software engineer in Pune fell victim to a familiar pattern. A WhatsApp group promised 40% returns. Small initial investments were allowed to be withdrawn, building trust. Eventually, he invested 34 lakh. When he tried to withdraw a larger sum, the platform demanded repeated fees and then stopped responding entirely. Police confirmed the platform was fake. The money was gone. Across the world, similar stories emerged. A retiree in Florida transferred her entire life savings, lured by risk-free returns. A small withdrawal worked as a lure. When larger sums were requested, she was asked for paperwork, fees, and verification steps. Then the platform vanished. If fake trading platforms could look real, what happened when scammers stopped pretending to trade at all? Enter digital income communities. Thousands of online groups claimed to teach people how to earn money from home. Marketed as mentorship programs, skill networks, or passive income ecosystems, they carefully avoided promises of profit, but members paid monthly or yearly fees, often encouraged to recruit others. Each new sign-up unlocked higher tiers, commissions, or exclusive access. Income depended entirely on growth. When growth slowed, payouts slowed. When growth stopped, payouts vanished. Indian cybercrime authorities reported a sharp rise in complaints tied to these schemes. In Gujarat alone, investment fraud losses exceeded 560 crore rupees in under a year. Victims described the same pattern: initial empowerment, small early earnings, mounting pressure to recruit. By the time the truth was clear, the money had already moved upward. Some founders disappeared. Others blamed members for lacking belief. Communities fractured into arguments, denial, and legal threats. Next came tokenized real-world assets. Projects claimed fractional ownership of real estate, gold, art, and farmland through blockchain. Investors believed they were buying pieces of real assets, but many assets didn't exist, or ownership wasn't legally transferable. Courts didn't recognize token claims. Technology cannot create legal rights where none exist. Even the most complex scams relied on one simple psychological trick: the illusion of control. Investors could see dashboards, charts, and transactions, but none reflected reality. That sense of control lowered skepticism and trapped victims. The simplest, most devastating scams promised stability: fixed monthly payouts, predictable income, no volatility. Calm dashboards, conservative charts, 5% a month, 10% a quarter. Early payouts came from new deposits. Then withdrawals slowed. Then communication stopped. Older adults were increasingly targeted, sometimes losing entire retirement accounts. Scammers posed as financial advisors offering safe investments with guaranteed returns. Professional websites, legal-sounding documents, and even AI-generated voices to maintain trust. And then came the most dangerous evolution. AI. In 2025, scammers no longer needed real founders. Deepfake videos showed executives giving interviews, voices were cloned. Faces were generated, entire leadership teams existed only digitally. Support chats responded instantly and endlessly. Victims often didn't realize they were interacting with automated systems. Fake news websites, copied logos, and imitation media pulled people in. By the time authorities traced them, operators had already rebranded and moved on. Some scams even impersonated real banks, media outlets, and public figures. Entire networks of fake websites and social media profiles led victims seamlessly from news to investment platform. The illusion was complete. Even beyond apps and AI, scammers used psychological tricks rooted in human behavior. Scarcity, authority, and social proof became tools of manipulation. Messages claimed limited-time offers, quoted fake testimonials, or showed other investors claiming massive profits. Each technique increased pressure, reduced skepticism, and made victims act faster than they would normally. And there's a final, terrifying detail: the speed at which money disappears today. Unlike old-school scams, which involved mailing checks or waiting days for deposits, digital scams move money almost instantly. Once transferred, tracing funds becomes exponentially harder. Every second counts, and for victims, hesitation often comes too late. And this is where it all connects. From fake crypto apps to digital hustles, from tokenized assets to AI-generated founders, every major investment scam of 2025 promised the same thing: effort without work, return without risk, certainty without doubt. The tools changed, the language evolved. Platforms looked polished and professional, but the lies stayed the same. Real investing involves uncertainty. Real opportunity carries risk. Remove both and it stops being opportunity. It becomes extraction. If this video made your stomach tighten even a little, that feeling matters. People in these cases weren't reckless, they thought they were being careful. Take 1 second to protect future you. Like this video so it reaches someone before the message that ruins their savings does. Subscribe, because the next scam won't look like the last one. And staying informed is one of the few defenses that still works.